December is here and the ball is about to drop, and you may be wondering, what's going on in the housing and mortgage market? Well, today, that's exactly what I'm about to talk about. Roll the intro. What a record year 2020 has been in the housing market, from record low rates to homes selling at record speeds. But before getting into market updates, I'm Damien L.Grant, a licensed mortgage advisor, and if you haven't been following the housing and mortgage market, then this video will bring you up to speed going into 2021, starting with rates. If you thought they couldn't go any lower, think again. For the 12th time this year, the average 30-year fix hit a new record low of 2.78%. Plus, mortgage rates have been consistently under 3% for the past few weeks. The results of this is an increase in refinances among homeowners. Not to mention, there was a surge in new applications due to Fannie and Freddie's Adverse Refinance Fee that went into effect December 1st that helped push the motivation. To learn more about the Adverse Refinance Fee, I'll leave a link to a video I did in the description below. Now, according to Black Knight, they quote, "Mortgage origination is showing no signs of slowing down, and they estimate the refinances will eclipse the refinances from the previous quarter by 25%. It'll be interesting to see how this plays out. Now, other than record low rates, 2020 is ending with a new president-elect, Joe Biden. For the past 2 years, the goal of the Federal Housing Finance Agency, or FHFA, under the Trump administration was to end Fannie Mae and Freddie Mac conservatorship, meaning out of government control. In fact, FHFA laid out a strategic plan over the next 3 years to prepare for the transition out. The plan may not go into effect with Biden soon to enter office. In fact, this presidency may have other implications for the housing market as a whole, like changes to the tax policy that could impact the cost of home ownership. New home buyers and middle class are expected to benefit the most from the tax code changes. Another implication to consider is the legislative revision throughout the U.S. housing market with new regulations is definitely something we all need to be aware of. Now, regardless who won the election, the agreement amongst economists is that interest rates are expected to remain low for the foreseeable future, and volume is forecasted to remain high, which is a great sign. Now, the downside these experts predict to be a major issue is the lack of inventory nationwide. According to Realtor.com, the national inventory has declined by 38.3% over the past year. So keep that in mind going into 2021 if you're in the market and you find yourself in a competitive multiple offer situation. Now, on the flip side to the election and low interest rates, homeowners have seen some tremendous appreciation. While COVID-19 has caused several adverse effects on our nation on both micro and macroeconomic levels, homeowners are seeing the bright side. Since the first major impact of the pandemic in February, home values have increased by over 6.7%, which helped fuel the housing market in 2020 as many homeowners have been able to access new available equity and cash in on those gains. Now, this uproar can have consequences in terms of widening the wealth imbalance throughout the US. But overall, it's helped millions of Americans who are homeowners. Some of the biggest swings are in major metro areas where there has been major exits to suburban neighborhoods. Wealthier residents who can afford higher prices stay, and renters and those being priced out leave. Plus, the surge of residents working from home have only worsened this trend. Regardless, home values continue to rise in these key areas. And according to Redfin, some of the largest value spikes in U.S. metro areas were found in Milwaukee, Charlotte, Austin, Sacramento, Detroit, Seattle, Phoenix, and Pittsburgh, which makes it exciting to see if the trend continues in 2021. Now, despite the lack of inventory, consumer demand remains high and sales trends continue to be strong here in Q4 of 2020, as the typical home spent 13 less days on the market compared to a typical home sold in 2019 at this time. And on average, nationwide, homes spend roughly 45 days on the market. and Northeastern, Southern, and Midwestern saw the biggest decrease in days on the market. The trend looks to be consistent with recent mortgage activity, and with overall applications gradually increasing by 3.8% from the prior week, resulting in year-over-year gains of 2.5% and 88% individually, with purchase applications dominating over the past few weeks. Plus, new listings are up 9% from earlier in the year, and 45% of homes that went under contract had an accepted offer in the first 2 weeks. With that said, if mortgage rates remain low, then that should maintain momentum seen in existing home sales year to date and going into 2021. So if you're thinking about jumping into the housing and mortgage market in 2021, what's your take? Leave it in the comment section below. And if you're applying for a mortgage, I'm giving away my new free guide on obtaining a mortgage during COVID-19. I'll leave a link in the description below. Now, if you like this video, smash that like button, subscribe, share it with your family and friends. Comment below on how helpful you found this video and what your biggest takeaways were. I look forward to receiving your feedback and giving you some responses as well. I'll see you on the next video, and thanks for watching.